Take a deep breath and ask yourself, why are you really losing money in the market? Is it because your system doesn't work? Is it because the market is unfair? Or maybe it's something deeper, something you're not even aware of. Let me tell you a story. A trader sits at his desk. The charts are open. The coffee's still warm. He's been studying technical patterns for 3 years. He knows every support level, every moving average, every backtested result. But right now, his hand is frozen above a mouse. He doesn't know whether to click or wait. The setup looks perfect, but fear whispers, what if it fails again? So he hesitates, misses the entry, watches the market fly, and hate begins to build, not just for the market, but for himself. If you've ever felt this, you're not alone. Every day, thousands of traders go through this exact moment. They know what to do, they've studied the rules, but when it matters most, they fall apart. Why? Because trading isn't a game against the market. It's a game against your own mind. And in this video, we're going to uncover why 95% of traders lose. Not because of lack of knowledge, but because of the invisible war happening between their beliefs, emotions, and expectations. We'll explore real stories, hard truths, and the mental rewiring you need to finally get out of your own way. So let's begin with the first realization that changed everything for me. You can be brilliant and still lose. He did everything right. He studied hard, read all the classic books. He learned how to draw support and resistance, how to calculate Fibonacci levels, how to recognize candlestick patterns in his sleep. He journaled every trade, backtested strategies for hundreds of hours, built spreadsheets that looked like NASA flight logs. He thought he was ready. And for a while, things went well. But then it happened. A loss. Then another. Then a winning trade that turned into a loss because he didn't take profit. Then a missed entry because he hesitated. Then revenge trading. Then fear. Then silence. He closed his charts, closed his laptop, and whispered to himself, I'm too smart to be losing like this. And he was right. He was smart. He just didn't know what he was fighting. You see, most traders enter the market thinking it's a battle of information. They think if they just study enough, if they know enough about indicators, about macroeconomics, about risk-to-reward ratios, they'll win. They treat trading like an exam they can ace with the right preparation. But trading doesn't test what you know. It tests how you think. And more than that, it tests how you feel in the exact moment where your money is on the line. This is the invisible war that smart traders keep losing, not because they're not smart enough, but because they never learn how to fight the right enemy. The real enemy is inside. Let me put it this way. Imagine 2 traders. Both start on the same day. Both deposit $10,000. Both study the same system. Trader A is incredibly analytical. He knows statistics, loves control. Trader B is emotional but curious. He doesn't just want to know what works. He wants to know why he keeps sabotaging himself. Fast forward 5 years. Trader A has blown through 3 accounts and is down to $3,000. Trader B, on the other hand, has grown his account to $250,000. What made the difference? Not the system, not luck, not intelligence. It was self-awareness. Trader A believed the market was a problem. Trader B realized he was the problem, and that changed everything. Most traders are like Trader A. They're brilliant on paper. They can explain divergence, quote the Greeks, draw Y-cost schematics with their eyes closed. But none of that matters if they can't pull the trigger when it's time, or if they get scared out of trade too early, or if they start chasing because they saw someone else win. The invisible war isn't fought with more information. It's fought with introspection, with the courage to ask yourself the hard questions. Why do I need to be right so badly? Why does a loss feel like a personal failure? Why do I keep repeating the same mistake, even though I know better? And most importantly, what am I afraid of? Because here's the truth. The market doesn't care how smart you are. It doesn't reward effort. It doesn't punish ignorance. It simply reflects your beliefs, your biases, your emotional patterns back at you in real time. trading is the most honest mirror you will ever look into. And for most of us, it's terrifying because it shows you where you're not free, where you're still attached, where you still need control, where your fear still owns you. But here's the good news. Once you start to see it, you can begin to change it. The moment you stop blaming the market, the moment you stop chasing the perfect system, the moment you stop trying to control what's uncontrollable, is the moment you begin to trade from a place of clarity. Because a trader who knows himself will always outperform the trader who only knows the charts. This war inside, it doesn't need to be fought violently. You don't need to fix yourself. You don't need to conquer fear or eliminate emotion. You just need to understand how your mind works, so you stop letting it run the show. Because right now, the majority of traders are not losing to price. They're not losing to volatility. They're not losing to institutions. They're losing to themselves, to hesitation, to hope, to the fantasy of control. But that doesn't have to be your story. Because once you see the mind for what it is, a storyteller trying to keep you safe, you can start to rewrite the story. And that's what we'll begin doing, starting now. In the next part, we're going to break down the most destructive story your mind tells you as a trader. It's a story that feels logical, that feels intelligent, but it's secretly destroying your confidence, your consistency, and your account. It's called the cycle of doom. And I promise, you'll see yourself in it. Do you remember your first win? Not the backtest, not the demo. I mean the first time you entered a real trade, clicked the button, and made money. The real thing, the rush of it, the disbelief. You probably stared at the green numbers and thought, wait, that's it? That's all I had to do? Click buy and I make money? It felt easy. Too easy. Like you found a cheat code. No fear. No hesitation. Just flow. That's what Mark Douglas calls the carefree state. And for many traders, it only happens once. Because then comes a loss. Not a small one. Not a learning experience kind of loss. But the one that hurts. The one that catches you off guard. That shakes your confidence. Suddenly, you're no longer in the carefree state. You're in survival mode. The market that once felt like a playground now feels like a battlefield. Every setup feels dangerous. Every entry feels personal. Every candle feels like a threat. And that's when it begins, the cycle. You tell yourself, I need to learn more. If I just understand the market better, I'll stop losing. If I master more indicators, I'll be safe. So you study, you buy courses, you watch hours of YouTube, you dive into order blocks, liquidity sweeps, fair value gaps, volume spikes. You learn everything. But something strange happens. The more you learn, the more pressure you feel. Because now, with all this knowledge, you expect to win. You expect the market to behave. And when it doesn't, when your perfect setup fails, you don't just feel disappointed. You feel betrayed. You did everything right. Why did it still go wrong? So you blame the market, then blame yourself, then start the cycle again. I need to learn more. I must have missed something. And round it goes. This is what Douglas called the cycle of doom. It's not a learning loop. It's a trap where more knowledge leads to more expectation. More expectation leads to more disappointment. And more disappointment drives you to seek even more knowledge. You're not becoming a better trader. You're becoming a more sophisticated victim. Let that sink in for a moment. The problem isn't that you're ignorant. The problem is that your knowledge has outgrown your emotional maturity. You're carrying too many expectations and not enough acceptance. Here's a real story. Jason was a trader from Chicago. 3 years in, brilliant guy. He could break down market structure better than most educators online. Had every ICT model memorized, backtested, even coded some into automation. But he couldn't hold a winning trade. Every time he entered, he micromanaged it, took partials too early, moved his stop too tight, or exited completely if the price moved one candle against him. I asked him, why do you cut trades early? He said, because if I lose, it means I didn't learn enough. It means I failed again. That's it right there. He wasn't trading the chart. He was trading his need to prove he was finally good enough. Jason didn't need more setups. He needed to heal the part of him that equated losses with personal worth. That's what the cycle of doom does. It convinces you that more knowledge will save you, but it only deepens a shame when it doesn't. You're not a beginner anymore. You already know enough. What's holding you back now isn't what you don't know. It's what you expect. Every time you enter a trade expecting it to work, expecting it to fulfill your system perfectly, expecting the market to behave, you're setting yourself up for emotional damage. Why? Because you've turned your strategy into a contract. But the market never signed it. The market doesn't owe you precision. It doesn't care that your setup looks clean. It doesn't care that you're tired or burned out or on a streak of losses. It just moves. It doesn't punish or reward. It reflects. And the more you try to control it, the more it reveals how little control you really have. So what's the solution? Simplicity, humility, letting go. Let go of the fantasy that more knowledge means more safety. Let go of the belief that the perfect system will eliminate losses. Let go of the idea that you can eliminate uncertainty. You can't, but you can learn to function within it. The best traders aren't the smartest. They're the most grounded, the most emotionally honest. They don't need the market to behave. They just need themselves to behave. So here's your homework. Write this on a sticky note and put it on your screen. I don't trade to be right. I trade to execute well. Let that be your compass, not your next indicator, not your next setup, not your next video. That sentence will save you more money than any strategy ever will, because it breaks the cycle. And once you break the cycle, you start to see clearly again. You start to trust again. You start to breathe again. And in that stillness, you begin to feel something that's been missing, self-trust. And self-trust is what allows you to handle fear, to face the unknown, to stay in the trade, to let the outcome unfold without needing to control it, which brings us to the next part. Because even when you learn to let go, there's still a deeper mechanism at work, one that hijacks your thinking before you even realize it. It's called the mental environment. And until you understand how it works, you'll keep repeating the same mistakes, even with the best strategy in the world. Let's go there now. Most traders think they're reacting to the market, but they're not. They're reacting to what the market means to them. That's a massive difference, because what you see on the chart is not what's really there. It's what your mind lets you see. Let me tell you a quick story. There's a man walking through the park with his dog. He sees a child playing in the grass. The child turns, sees the dog, and runs toward it, arms wide open. But as he gets closer, the dog suddenly growls and bites him. The boy screams. Blood on his arm. The parents rush in. Ambulance. Hospital. Trauma. Now fast forward 6 months. The same child sees another dog. This one is gentle, calm, tail wagging. But the moment the boy sees it, he panics. He screams and runs. Why? Because his brain doesn't see this dog. It sees the memory of the first one. It sees pain. It sees threat. The boy isn't responding to reality. He's responding to the meaning his mind created the last time. And this is exactly what traders do every single day. You get stopped out on a breakout trade. It hurts. You feel stupid. You swear never again. Next week, you see the exact same setup. Everything lines up, but you hesitate. You don't enter, or you enter late, or you cut it early. The setup didn't fail you. Your belief about it did. That's what Mark Douglas meant when he said, "You're not trading the market. You're trading your belief system." Let that sink in. You're not reacting to price. You're reacting to your associations, to your past, to your fears, to the stories you've unconsciously written about what certain moves mean. You see a red candle and your body tightens. You see a gap fill and your pulse races. You see volume spike and your mind whispers, "This is it. Don't mess it up." But none of that is coming from the market. It's coming from within you. Think of your mind like a filter. Every experience, every win, every loss, every mistake, it all builds layers. And those layers determine what information gets through. A trader who lost big on a fake out sees danger in every breakout. A trader who missed a parabolic run sees opportunity in every pump, even when it's noise. A trader who had one huge win on a reversal now tries to catch every falling knife. This isn't strategy. This is trauma. And trauma doesn't make rational decisions. It makes protective ones, which means you can have the best system in the world. You can have a 70% win rate. But if your beliefs are working against your edge, you will still lose because your beliefs will distort your execution. Let me give you another real-world example. Samantha, a trader from Austin, had a solid trading plan. She traded key levels with confirmation. Her system was profitable, but she kept breaking even. Month after month, she'd win a few, lose a few, end up flat. We reviewed her trades. The setups were fine, but every time she took a loss, she'd avoid the next setup, even when it was perfect. Why? Because she associated the setup itself with the emotion of failure. Her mind was trying to protect her from reliving the pain, but in doing so, it kept her stuck. This is the invisible sabotage most traders never see, because it doesn't happen on the chart. It happens before you even open the platform. It happens in how you interpret what price means, in what you believe about your ability to handle uncertainty, in what you fear will happen if you're wrong again. And until you examine those beliefs, you're not trading a system. You're trading your survival instincts. The market becomes a mirror. It reflects back everything you bring to it. Your patience, your fear, your need to win, your fear of being wrong, your guilt over past losses, your doubts about whether you really belong here. It reflects all of it. And that's why the same chart can look completely different to two people. One sees opportunity. The other sees threat. Same candles, different beliefs. So what's the way out? Awareness. You have to start noticing not just what you're doing, but why you're doing it. Ask yourself, why did I hesitate on that trade? Why did I cut it early? Why did I avoid re-entering? What was I afraid might happen? Then go deeper. Where did that fear come from? What belief is it tied to? Is it true? Or is it just old pain wearing a new face? Because once you name the belief, you can challenge it. And when you challenge it, you weaken it. And when you weaken it, you create space for something better. That's how change happens. Not by reading more books, not by buying more courses, but by looking in the mirror and choosing to see clearly. So here's your practice for this week. After each trade, don't just review the chart. Review yourself. Ask, what did I believe during this trade? Did I follow the market or my fears? What did I expect and what happened instead? You'll be surprised at how much you learn. Because once you understand that you're not trading patterns, you're trading beliefs, you'll start to build something far more powerful than any system. Self-trust. And self-trust is what allows you to finally detach, to trade clean, to trade free, to let go. And that brings us to something even deeper. Because if your beliefs shape how you see the market, then the next question is, where do those beliefs come from? What created them? What reinforces them? And most importantly, how do you rewire them? That's exactly what we'll explore in the next part, the mental environment. There's a moment every trader goes through, a moment where the chart moves violently against you, and your whole body tenses. You feel angry, you feel betrayed, and you whisper something under your breath. This market hates me. It sounds silly when you say it out loud, but in the heat of the moment, it feels real. You followed your system. You waited patiently. You did everything right, and still it failed. And so, somewhere deep inside, a story begins to form. The market is against me. It's personal now. But here's the truth. The market doesn't care about you. Not even a little. Not about your entry. Not about your stop loss. Not about how hard you've worked. Not about how much you need this win. It doesn't even know you exist. And that is the best possible news. Because if the market did care, then you'd be at its mercy. If the market had feelings, it could choose to punish you. to spite you, to target you. But it doesn't. The market is not your friend, and it's not your enemy. It's not a person. It's a mechanism, a neutral arena where everyone brings their beliefs, their capital, their emotions, and price simply moves based on the balance of those forces. Let me give you a real example. A trader named Brian entered a long trade on euro to US dollar after NFB. All his confluences lined up. His system was solid. But just 2 minutes later, the market spiked down 50 pips and stopped him out. He was furious. He posted in a forum, "Someone's manipulating the market. This is a trap. They're hunting my stop." But here's what really happened. A hedge fund unloaded a massive position, completely unrelated to his trade. That order flow changed short-term structure. His stop happened to be right in the path. It wasn't about Brian. It was about liquidity. The market didn't even know he was there. And that's how it always is. The price doesn't move because of you. It moves because of everyone. It's not personal. It's structural. This truth, if you accept it, is incredibly freeing. Because once you stop thinking the market owes you something, you stop negotiating with it. You stop trying to force outcomes. You stop thinking, "But I waited all week for this setup. It has to work." No, it doesn't. The market doesn't know what you waited for. It doesn't care about your patience. It doesn't even know what your setup is. It just moves. And when you truly accept that, you stop needing the market to validate you. You stop tying your self-worth to a trade outcome. You stop saying things like, "I knew this would happen. This always happens to me. The market did this to me." Because again, it didn't do anything to you. It just did what it always does. And you happen to be on the other side of the move. Let that sink in. You are not being punished. You are being reflected. Your reaction isn't proof that the market is unfair. It's proof that your expectations were misplaced. And misplaced expectations are the #1 cause of emotional pain in trading. Let me say that again. Pain in trading isn't caused by losses. It's caused by expecting something the market never promised. You expected a breakout. You got a fake out. You expected a trend continuation. You got a reversal. You expected your edge to work this time. It didn't. That's not failure. That's probability. And when you accept that, you stop fighting reality. You stop making the market a villain, because it's not one. It's just a mirror. It reflects your planning, your emotional control, your ability to adapt. Nothing more, nothing less. Here's the shift I want you to make. Stop asking the market to cooperate. Start asking yourself to prepare. Stop waiting for fairness. Start building flexibility. Because the market isn't here to make you rich. It's not here to make you suffer either. It's just here, neutral, consistent, unmoved by your feelings. And that is beautiful, because it means your job becomes very clear. Your results don't depend on the market. They depend on how well you interact with it. That's it. So stop trying to win its favor. Stop trying to decode its moods. It doesn't have any. Instead, study your own. Because while you can't control the market, you can control your execution. You can control your risk. You can control your mindset. You can control how you respond to randomness. And that's enough. It really is. You don't need the market to change. You just need to stop resisting what it already is. And if you can do that, if you can finally stop personalizing every tick, you'll find a kind of peace you didn't think was possible in trading. A calm rooted not in prediction, but in perspective. And that brings us to a deeper understanding. If the market is truly random in the short term, and if it doesn't care about your feelings, then how do consistent traders make money? What do they know that others don't? That's what we'll uncover in the next part. The 5 trading truths that will free you. There's a moment in every trader's journey when they stop looking for the perfect system and start looking inward. For most of us, that shift doesn't come gently. It comes after enough frustration, enough emotional pain, enough nights staring at the ceiling, asking, what am I missing? That's when we're finally ready to hear the truth. Not the kind you read in forums, not the kind someone sells you in a course, but the kind that actually liberates you. Mark Douglas called them the 5 fundamental truths of trading. And when you internalize these, your entire experience as a trader begins to change. Let's go through them one by one. Truth 1. Anything can happen. Yes, anything. A tweet, a war, an algorithmic error, a whale exiting a position. The market doesn't need a reason. It only needs participants. When you truly accept this, you stop being surprised. You stop saying, I can't believe it broke that level. I knew it was going to reverse here. This shouldn't have happened. Because those phrases come from a belief that the market owes you logic. It doesn't. Acceptance of randomness is the beginning of emotional freedom. Let me give you a story. In 2020, a trader named Alex shorted oil right before the crash. All his confluences lined up, but he hesitated because surely oil won't go below zero. That day, it went negative for the first time in history. The market didn't care what was supposed to happen. It just happened. Truth 2, you don't need to know what happens next to make money. Read that again. You don't need to predict. You need to respond. Consistent profits come not from prediction, but from edge execution. Think of a casino. It doesn't know which player will win the next hand, but it doesn't care. It has a statistical edge. And over thousands of hands, that edge plays out. Your job is the same. If your system gives you a 60% win rate, you don't need to win this trade. You just need to take the next 100 trades with discipline. That's how professionals win. They don't get excited when a trade works. They don't get shaken when one fails, because they're not attached to outcomes. They're committed to process. Truth 3. There's a random distribution of wins and losses. Let's say your strategy wins 6 out of 10 times. You might expect to win, lose, win, but reality doesn't work that way. You might get 7 losses in a row, then 12 wins, then a messy mix. This is called random distribution, and it drives emotional traders crazy because they think, if this setup works 60% of the time, why is it failing now? Answer, because you're inside a sequence, not outside of it. And in a random sequence, anything is possible. That's why risk management matters more than prediction, because we can't control the sequence, but we can control how we survive it. Truth 4, an edge is just a probability, nothing more. It's not a promise, not a guarantee, not a crystal ball. Your setup does not know what the market will do. It only reflects that, over time, it tends to work. When you treat an edge like a guarantee, you create tension, expectation, frustration. But when you treat it like probability, you allow room for loss, room for flexibility, room for growth. This mindset shift is huge. You go from being right or wrong to being aligned or not aligned. And that takes all the pressure off. Truth 5. Every moment in the market is unique. This is the one most traders resist. We love patterns. We love setups that look just like last week. But the truth is, no 2 moments are ever the same. The structure might look similar, but the participants are different. The news is different. The order flow is different. You are different. That means you can't rely on the past to predict the present. You can only use it to guide your framework, then respond to what's actually happening. This keeps you grounded, flexible, present, and being present is the only place you can trade from power. Now take a breath, because if these truths feel heavy, it's only because you're letting go of an illusion. The illusion that trading is about control. It's not. It's about flow, adaptation, trust, not trust in the market, but trust in yourself, to act with discipline, to accept risk, to stay grounded in the middle of chaos. So here's your reflection for today. Which of these 5 truths do you resist the most? Is it the idea that anything can happen? That you don't need to know what happens next? That your edge isn't a guarantee? Sit with it. Write it down. Because where you resist the truth is where your growth is waiting. And once you make peace with that, you become free, truly free. But freedom isn't just mental. It's emotional too. And in the next part, we'll go deeper into the emotions that quietly sabotage even the smartest traders. The silent killers of consistency. They're not what you think. Let's explore them together in the next part. Fear in disguise. How your brain tricks you into failing. Fear is not always loud. Sometimes it whispers. It doesn't shout, "Get out of the trade." Instead, it says, "Maybe wait for more confirmation. Let's see one more candle. This looks a bit risky right now." And just like that, you hesitate. The setup is still valid, but your finger pulls back from a mouse. Your body tightens. Your brain starts spinning. What if it fails? What if this is the one that wipes me out? What if I'm wrong again? This is fear in disguise. It doesn't always come as panic. It often comes dressed as logic, caution, analysis, even strategy. But underneath it all, it's just fear. And when you don't see it for what it is, it controls your trading. Let's talk about the 4 silent fears that sabotage most traders. You might not even realize you have them, because they don't scream, they whisper, and they sound smart. Fear 1, the fear of being wrong. This one hides behind perfectionism. It tells you to wait for the perfect setup, to avoid low-quality trades, to protect your win rate. But really, it's about protecting your ego, because being wrong doesn't just mean losing money. It means facing the voice inside that says, "You're not good enough. You keep messing this up. Everyone else is winning. What's wrong with you?" So you avoid risk. You chase confirmation. You overthink, and the trade passes you by. Here's a truth to hold on to. Being wrong is not failure. It's part of the business. Doctors misdiagnose. Engineers make design errors. Athletes miss shots. It doesn't mean they're failures. It means they're human. And so are you. Fear 2, the fear of losing money. This fear hides behind smart money management. It tells you to keep your stops tight, to cut losses fast, to be disciplined. But really, you're just terrified of pain. And sometimes your stops are so tight, you get wicked out by normal price noise. It's like trying to cross a river by stepping on stones. But panicking at the first splash. Loss is part of this game. It doesn't mean you're reckless. It means you're playing. So instead of trying to eliminate loss, learn to absorb it. Risk only what you can emotionally release. If the loss makes you flinch, the position is too big. You can't learn if you're afraid to lose. Fear 3, the fear of missing out. Ah yes, FOMO. It sounds like this move is running. I'm going to miss it. Everyone else is already in. I can't sit here and do nothing. This fear tricks you into chasing bad entries, entering too late, over-trading, revenge trading, and it feels justified because you were right about direction. But price doesn't reward being right. It rewards positioning. If you're not early, you're late. And if you're late, you're either risking too much or getting stopped out on the pullback. FOMO tells you the market is leaving without you. But here's the truth. The market always gives another chance. But you only get to stay in the game if you protect your capital. Let it go. Miss the move. Wait for your moment. There will always be another setup. There is only one you. Fear 4. The fear of leaving money on the table. This one is sneaky. It kicks in after a winning trade. You took profit. You followed your rules. But then the price keeps running. And suddenly, what felt like a win feels like a mistake. You say things like, "I exited too early. I should have held longer. I left so much money behind." This fear leads to overholding, re-entering impulsively, breaking your exit rules. It turns a win into frustration. But here's the shift. You can't capture every move. And you don't need to. You're not here to catch tops and bottoms. You're here to execute well. Let others chase perfect exits. You focus on consistency. Because the market doesn't care if you left money behind. But your psychology does. Protect it. So now the question becomes, how do you dissolve these fears? The answer is simple, but not easy. You accept the risk. Fully. Not intellectually. Emotionally. You accept that you might be wrong. You accept that you might lose. You accept that you might miss out. You accept that you might leave profits on the table. When you truly accept these possibilities, they lose their power over you. Because you're no longer resisting reality. You're flowing with it. This is what professional traders do differently. They're not fearless. They're familiar with fear, and they've stopped letting it drive the bus. Here's a journal prompt for today. Write down the last trade you messed up and ask, which fear was really behind it? Was it fear of being wrong? Fear of losing? FOMO? Fear of leaving money? Be honest. Then write what you wish you had believed instead. Do this every day for a week. Watch what shifts, because naming your fear is the first step to disarming it. And the more you disarm it, the more freedom you find. And that freedom, that ability to see clearly, think calmly, and execute without emotional distortion. That's what leads you into the next level of trading. And that's exactly where we're heading next. The mechanical stage, how professionals trade without emotion. At some point in your trading journey, you realize something strange. You already know what to do. You have a system. You've backtested it. It works on paper. But when real money's on the line, you can't seem to follow it. You hesitate. You overthink. You break your rules. And afterward, you ask yourself the same question every time. Why did I do that? It's not that you don't know what to do. It's that you don't trust yourself to do it. And that's where the professionals separate from everyone else. They've built a bridge from knowing to executing. And they've done it by going mechanical. Let me tell you about Sarah. She's been trading for 6 years now. She's not flashy, not a guru, no million-dollar Lumbo lifestyle, just consistent. She trades U.S. equities, same 3 setups, same rules, every day. Her journal looks like this: 1% risk per trade, predefined entry, stop, and target, no more than 3 trades per day, no trades during major news, stop after 2 consecutive losses. Simple, right? But here's the difference. She follows it. Exactly. If the setup appears, she enters. If her stop hits, she exits. No hoping. No adjusting. No, maybe it'll come back. When I asked her how she does it, she said something I'll never forget. I made a deal with myself. My job is not to be right. My job is to follow the rules that give me an edge. That's it. That's mechanical trading. It doesn't mean you're emotionless. It means your emotions don't decide. Your system does. And when you hand over execution to the system, you free yourself from the mental noise. You don't have to decide what's enough confirmation, whether the stop is a little too tight, whether it feels like it might bounce. All those decisions have already been made in your plan. Now your job is to show up and execute like a machine. Why does this work? Because it removes the biggest liability in your trading. Your emotions, your fears, your past experiences, your overthinking. Mechanical trading replaces them with something much more reliable. Consistency. And consistency is what builds confidence. Let's break it down. Step 1, predefine everything. Before the trade starts, you should already know your entry, your stop, your target, your lot size, your exit rules, when not to trade. If you're deciding these things while the trade is open, you're no longer trading your plan. You're trading your fear. Step 2, follow the process, not the outcome. This is the hard part, because we all want to win. We all want to be right. But the professionals understand. A good trade is one that follows the plan, regardless of result. If you followed your rules and lost, that's a good trade. If you broke your rules and won, that's a bad trade. This mindset is rare, but it's the foundation of long-term success. Step 3, track behavior, not just numbers. Most traders track win rate, profit factor, drawdown, but they never track themselves. Did you hesitate? Did you move your stop? Did you revenge trade? This is where real growth happens. Because until you can execute like a robot, you'll always be at the mercy of your emotions. Now let's be honest, this isn't glamorous. There's no adrenaline rush, no hero trade that saves a week, No story to brag about on Reddit. Just boring, consistent process. And that's exactly why it works. Because your brain craves stimulation. It loves novelty. It wants to feel like something is happening. Mechanical trading says, I'm okay with feeling nothing if it means I get results. And here's the surprising part. Once you master this mechanical stage, you can begin to reintroduce discretion, intuition, artistry, but only after the foundation is set. Just like a pianist must master the scales before they improvise, just like a martial artist must drill the basics before they freestyle in a fight. Freedom comes after structure, not before. So if you're struggling to stay consistent, ask yourself, do I have clear rules? Do I follow them exactly? Do I track myself, not just my trades? And if the answer is no to any of these, start there. Commit to 20 trades. No deviation. No feeling it out. Just pure mechanical execution. You'll be amazed at how much clarity it brings. Because the more mechanical you become, the less emotional you feel. And the less emotional you feel, the more power you have. In the next part, we'll zoom out even further. Because once you understand mechanics, you begin to see that trading isn't about any single trade at all. It's about probability. And those who win consistently don't think like gamblers. They think like casinos. Let's go there next. From gambler to casino, thinking in probabilities. Close your eyes for a moment. Now imagine this. You walk into a casino in Las Vegas. The lights are flashing. The sound of coins and laughter echo all around. People are placing bets, spinning wheels, rolling dice. You watch as one man wins 5 hands of blackjack in a row. He's excited. He's shouting. He thinks he's figured it out. But somewhere above him, in a quiet room with no noise, a casino manager watches the numbers on a screen. He doesn't flinch. He doesn't panic. Because he knows one thing that man doesn't. Over time, the house always wins. Not because it predicts the outcome, but because it understands probability. And that's the shift most traders never make. They think like gamblers. Professionals think like casinos. Let me explain. A gambler is obsessed with the next trade. Will this be the winner? Will this make back my losses? Will this be the one? His emotions swing with every candle. He's euphoric when he wins, devastated when he loses, and he sees each trade as a personal referendum on his skill, his worth, his identity. A casino doesn't care about the outcome of the next bet, not even a little. It focuses on the edge, on consistent execution, on managing risk across thousands of spins. It knows its advantage isn't in prediction, it's in process and patience. Let's bring that back to trading. Say your strategy has a 60% win rate. That means out of 100 trades, you expect about 60 to win and 40 to lose. But you have no idea what the sequence will be. You could have 10 wins, 7 losses, 13 wins, 10 losses, or 7 losses in a row, then 15 wins, then 5 losses. All of that is still within the edge. But gambler sees 7 losses in a row and panics. This system doesn't work. I've lost my touch. I need to switch strategies. A casino thinker sees the same 7 losses and shrugs. It's part of the curve. Keep executing. Let the edge play out. Now, let's get even more practical. Think about how you react to winning trades. Do you feel brilliant? Do you raise your lot size? Do you think you cracked the code? That's gambler thinking. Or when you lose, do you cut the next trade short? Avoid the next setup? Go back to demo? That's gambler behavior too. The casino doesn't get cocky after a big win. It doesn't get scared after a big loss. It just keeps showing up. Same system, same process, day after day. That's professionalism. And it's built on one truth. No single trade matters. Here's an analogy that helped me shift. Imagine flipping a coin. You know it's a 50-50 game. Now imagine you're betting on heads 100 times. If the first 5 flips are tails, do you panic? No, because you trust the math. You know the law of large numbers is on your side. That's how professionals approach trading. Each trade is just one flip, one spin, one roll. It's not the one that matters. It's the series. Let me give you a story. A trader named Marcus ran a prop account. He had a strategy with a 65% win rate. 1 month, he had a string of 12 losses in 18 trades. He was furious. He almost quit, but instead, he kept executing. By the end of the quarter, he was up 8%, exactly in line with the system's long-term expectation, because he trusted the process. He didn't need the short term to feel good. He needed it to be consistent. And that's what most traders miss. So here's what I want you to take away. Let go of needing to be right. Let go of judging yourself on a single outcome. Let go of the story that this trade matters more than the others, because it doesn't. You are not trying to win the next trade. You're trying to win the game. And the game is probability. If you think like a casino, you realize that most of trading is just numbers playing out. It's not about your intuition, not about being a genius, not about outsmarting the market. It's about showing up with discipline and letting the law of large numbers do the heavy lifting. Here's your reflection. What part of you still thinks like a gambler? Is it the part that over-leverages after a win, that gets scared after a loss, that avoids trades because the last one failed? Name it, own it, then start thinking bigger. Think like the house. Because when you finally shift into that perspective, trading gets quieter, more neutral, more boring. And ironically, that's when you start making money. And in the next part, we'll go even deeper. Because even when you embrace probability, even when you trade mechanically, even when you think like a casino, there's one last piece. Risk, not just controlling it, but accepting it so fully that fear disappears. Let's explore that next. Predefined risk, the hidden key to emotional neutrality. They call it the zone. That moment where everything clicks, where your thoughts quiet, where the chart feels effortless. You're not overthinking. You're not doubting. You're simply watching, flowing. And when it's time to act, you act. No hesitation, no fear, no internal debate. Just clarity, precision, presence. This is the holy grail of performance, not just in trading, but in sports, in music, in combat, in art. And yes, it's real, but it's not magic, and it's not random. It's earned. Let me describe it first. In the zone, time slows down. The candles feel smoother. You're not trying to guess. You're not trying to win. You're just in sync. You feel the rhythm of the market, not in a mystical way, but in a grounded, practical one. It's like your system becomes part of your nervous system. Entries happen with conviction. Stops are honored without emotion. Profits are taken with zero greed. You're not chasing. You're not hoping. You're just present. And that presence, that calm intensity, is where elite trading lives. But here's the thing. You can't force the zone. You can't will your way into it. You can't get there by trying harder. You arrive at the zone by removing what blocks it. And what blocks it? Conflict, internal noise, mixed beliefs. The moment you hesitate, the moment you argue with yourself, the moment you start trying to control the market, you're out, because the zone doesn't exist where fear and doubt live. So how do elite traders access it? Not through hype, not through motivation, but through structure. The zone is the natural state of a well-trained mind, executing a clear plan with full emotional acceptance of risk. Let that sink in. It's not about being brave. It's about being clear. And clarity comes from knowing your edge, trusting your rules, accepting that anything can happen, being okay with any outcome. Here's a real example. David was a swing trader. He had a solid system, but always second-guess his entries. He'd see a setup, then start thinking, what if it's a fake out? What if I'm early? What if it goes without me? So he'd either enter late or miss the trade entirely. One day, he made a change. He wrote down a sentence on a sticky note. My job is not to predict. My job is to follow my edge. Every morning, he read that note. Every night, He reviewed whether he followed it, and after 60 days, something shifted. He stopped hesitating. He stopped fighting himself. He started flowing, not because the market changed, but because he did. That's the zone. It's not a magical state. It's the absence of internal conflict. Let's talk about how you can get there. 1. Simplify everything. Complexity kills flow. If your strategy has too many conditions, too many exceptions, too many maybes, your mind can't relax. It overthinks. So strip it down. 1 setup, 1 time frame. Clear rules. Let your brain breathe. 2. Remove outcome obsession. The zone doesn't care about this trade. It cares about execution. If you're obsessing about profit, you're out. If you're afraid to lose, you're out. Your job isn't to win. Your job is to follow. Paradoxically, when you stop trying to win, you start winning more. 3. Create a calm environment. Flow doesn't happen in chaos. No news channels. No Discord alerts. No multitasking. Just you, your charts, and your breath. The zone requires space. Mentally and physically, make it sacred. Train like an athlete. Athletes don't get into the zone by accident. They train systems into muscle memory. You must do the same. Backtest, simulate, rehearse your execution. So when real trades come, you're not reacting. You're repeating what you've trained. 5. Accept risk emotionally, not just logically. This is key. Most traders say, I accept the risk, but they don't feel it. They still flinch when price moves, still panic when red appears. The zone doesn't appear until risk becomes neutral, not scary, not exciting, just part of the game. That's the shift. The zone is not a shortcut. It's not a cheat code. It's the reward for alignment. Mental, emotional, strategic. It's what happens when your beliefs support your rules and your actions follow both. It's rare, but it's real. And once you felt it, you'll never want to trade outside it again. So here's your next step. Don't chase the zone. Clear the noise that's keeping you from it. And when it comes, welcome it. Be humble, be quiet, and let it guide you. Because the zone isn't a destination. It's a way of being, and it's available to anyone willing to do the inner work. And now that we've explored presence, let's talk about transformation. Because it's not enough to understand. You have to rewire, to reprogram the habits that keep pulling you back into chaos. That's what we'll do in the final part of this journey, your 30-day trader transformation protocol. You've made it this far. You've faced a mirror. You've questioned your beliefs. You've unlearned the myths. You've seen the difference between knowledge and execution. But understanding isn't enough. If you want to transform, you have to retrain your mind. Deliberately, repeatedly, intentionally. The good news? You don't need years. You don't need to read 50 more books. You don't need another strategy. You need structure. You need a protocol. Something simple, practical, daily. So here it is, your 30-day transformation framework to rewire the way you think, feel, and trade. Week 1, awareness. Watch the mind. Stop trading live. For 1 week, just paper trade. Focus entirely on your thoughts and emotions during execution. Every time you see a setup, write down, what am I thinking? What am I feeling? What is my body doing? Don't judge it, just observe. You're building self-awareness. You're learning your patterns. Then, each night, journal with this prompt. Trading is... Money means... Losing makes me feel... I believe I deserve. Let the answers come, even if they surprise you, especially if they scare you. You're mapping the mental architecture of your trading life. Week 2, reprogram, install new beliefs. Now that you see the old wiring, it's time to change it. Each morning, spend 10 minutes visualizing. You, trading calmly, executing your plan, accepting losses, walking away after a stop without frustration. Don't just see it, feel it. Let your body experience emotional neutrality. Then, each day, Pick one limiting belief you uncovered and rewrite it like this. Old, losing means I failed. New, losing is part of the edge playing out. Repeat it, write it, feel it. Don't fake it. Make it real. You're not just reading affirmations. You're installing new emotional pathways. Week 3, integration, real trade, small risk. Now it's time to go live again, but with reduced size. Maybe 25% of your normal risk. The focus now is not profit. It's execution with emotion. Trade your system. Observe your reactions. After every trade, ask, did I follow my rules? Where did fear sneak in? What belief drove this action? Then log one sentence. Today I acted from fear, confidence, revenge, discipline. You're training not just your hand, but your identity as a trader. Week 4, expansion, build emotional resilience. Now you begin increasing size, but only if you stay consistent in week 3. Each morning, revisit your rules. Each evening, review 2 things. Did I follow the system? Did I stay emotionally neutral? If either answer is no, you reduce size the next day, not as punishment, as practice, because true consistency isn't just execution. It's your ability to stay grounded, regardless of market noise. End each day with the sentence. No matter what the market did today, I was prepared, grounded, reactive, emotional, mechanical, and mean it. Final reflection. You are no longer the same trader. By day 30, you'll notice something has changed. Not your strategy, not your tools. You'll trust yourself more. You'll hesitate less. You'll need less confirmation because you've practiced trading not just from the head, but from clarity. You installed a new operating system, one that isn't addicted to certainty, one that isn't terrified of loss, one that doesn't flinch at randomness, and the results will speak for themselves. Let me tell you something important. You don't have to be perfect to be consistent. You just have to stop fighting reality. And these 30 days, they're not about changing the market. They're about changing how you show up to it. So take the challenge. Print this out. Commit to it, one day at a time. If you do, you won't just become a better trader. You'll become a more grounded person. And that is the real win. Because in the end, trading doesn't just reveal your skills. It reveals your relationship with uncertainty, with control, with trust, with yourself. And when you shift those things, everything changes. But before we close, there's one final message, a lesson so important. It doesn't belong to any system, or a strategy, or a setup. It belongs to you, and it lives at the heart of every transformation. We'll explore it now in our final part, liberation, the moment you finally let go. Take a deep breath and let it out slowly. Right now, somewhere in the world, a trader is refreshing their chart for the 10th time in 1 minute. They're scanning social media. They're overthinking a setup. They're wondering why this is still so hard. They know the system. They've studied the market. They've tried so many things. But deep down, they're still looking for something. Not an edge, not a strategy, but a sense of control. And it's that search, that subtle desperation, that keeps them stuck. Let me tell you something that changed my trading forever. The moment I stopped trying to control the market was the moment I started controlling myself. That's liberation. It's not a tool. It's not a technique. It's a release from needing to always be right, from needing the market to behave, from needing proof before you trust. Because when you let go of needing certainty, you become powerful in a different way. You become stable, still, present. You begin to act, not from fear or hope, but from clarity. You stop fighting the market. You stop fighting yourself. You start trading. And here's the paradox. Letting go doesn't mean giving up. It means giving yourself permission to trust the edge, to trust the system, to trust your ability to adapt. You no longer chase outcomes. You follow process. You no longer demand wins. You honor risk. You no longer attach your worth to results. You find it in how you show up. There's a story I think about often. A monk was once asked, "What's the secret to peace?" He smiled and said, "Want nothing, resist nothing, be present with everything." That's the zone. That's liberation. That's where great trading begins. Not when you know everything, but when you no longer need to. So here's your final shift. Stop trying to be the perfect trader. Be the consistent one. Be the grounded one. Be the one who follows a plan. Even when it's boring. Even when it's hard. Especially when it's hard. Because that's the work. That's the way. That's the difference between those who make it and those who keep starting over. Let go of the fantasy, the hero trade, the perfect strategy, and step into reality. Success is simple. It's just not easy. You already have what you need. The next chapter isn't about learning more. It's about becoming less reactive, less impulsive, less attached, more intentional, more centered, more real. So as we close this journey together, I want to leave you with one last image. You, calm, focused, trading from peace, not proving anything, not chasing anything, just doing the work. That version of you isn't far away. It's already within you, waiting patiently for the moment you finally let go. And if this video resonated with you, if something inside feels a little more steady now, if you're ready to stop fighting and start flowing, then take a moment. Comment below with just one word. I'm ready, because you are, and we'll be right here for every next step of your journey. You've got this. Welcome to the 5%.